They mentioned that the company was a strategic asset, that there was some national security issues as well because of the activities around cyber for Telefonica. So now that key shareholder, the Spanish government, having this key influence there, who should be leading the company. So now José María Álvarez Payete leaving the company. But at the time when STC took the stake, some investors said, look, this was also a proof, a vote of confidence into the company and the strategy of the CEO. You know, when he came on board in 2016, the company had 50 billion euros in debt because of the heavy investment that, like all telco companies, they had to make into, you know, installing the fiber, 5G, all this switch to new technology, costing them a lot of money. He's reduced that by half during his tenure as well. He's concentrated the business a little bit more. He got rid of some businesses in Latin America to focus on the key markets of Spain, the UK, Germany, and Brazil. And to some extent, that has started to bear fruit at Telefonica. But here again, new shareholding structure, new key shareholders wanting to change things going forward. So now this new CEO coming on board, Marc Murtra, who has been at that defense company since 2021 with the key shareholders there, is also the Spanish government. Now the opposition in Spain has become a bit of a political storm. The opposition in Spain saying that Sanchez is doing a power grab on the key company in the country after they took that stake in Telefonica. So interesting to see that, but also interesting to see a negative reaction on the market. Investors don't seem to be too happy at the moment with the change, with the shares down almost 3% in Madrid after the news.
Exactly. Well, let's see what will happen. But thanks for the update, Charlotte. Meanwhile, in other corporate news, a spokesperson for Santander told CNBC that the UK remains, quote, a core market for the lender and its strategy has not changed. This after the Financial Times reported that the bank could be considering exiting the UK market as it explores a number of strategic options. In other banking news, Commerzbank is reportedly looking at cutting thousands of roles as the CEO, Bettina Orlap, looks to boost profitability and shareholder returns. That's according to the Financial Times as well. It comes in the wake of recent advances from UniCredit boss Andrea Orcel. The Italian lender owns an effective stake of 28% in its German rival and made no secret of its takeover ambitions. In a statement to CNBC, Commerzbank said it would offer a comprehensive update to its strategy at its Capital Markets Day in February, adding, quote, increasing competitiveness remains an ongoing business task. Staying in Germany, Friedrich Merz, the man widely tipped to be Germany's next chancellor, is vowing to expand the country's energy reach by building up to 50 new gas-fired power plants if his Christian Democrat Party wins next month's election. Speaking to local media over the weekend, Merz said the new plants needed to be connected to the grid immediately. And Friedrich Merz's CDU is widely expected to come out first in next month's federal election, but questions remain over who his potential coalition partners will be. Annette had a chance to catch up with the Bundestag member for the Greens, Deborah Düring, and asked whether the party would advocate for more business-friendly environment policies given the German economy's sluggish performance.
I would say that in energy policy in particular, the Greens have always been the party that clearly pointed out that a one-sided dependence on Russia is extremely dangerous. And that is why we have always fought to prioritise the expansion of renewable energies. This is exactly what we have achieved over the last 3 years. Renewable energy has gone through the roof in Germany, and that's not only relevant for Germany's industrial base, it's also hugely relevant for Germany's independence, and I think that's exactly what we need to continue to drive forward.
The German corporates, especially those who need a lot of energies, are complaining about the high energy prices in the country, and in other countries we see a new focus on nuclear energy. Is that anything you would support as well, given that it could actually be a transitionary way of creating cheap energy?
I think it's time we stopped talking about transitionary energy and started talking about how we can make energy truly independent in the long term. Our way to achieve this is through a massive expansion of renewable energies. This is exactly what Robert Habeck has been working on successfully for the last 3 years. And to be honest, I think the question of nuclear energy is a bit dubious, because if we look at France, for example, we can see that the energy infrastructure there is coming to a partial standstill in relation to nuclear energy, because there's not enough water to cool the towers sufficiently, which in the end is due to the climate crisis. To be honest, I don't think it is a sustainable source of energy. It sounds more like a backward-facing source of energy to me.
Elsewhere, 6 Russian oil tankers still being built have been included in the latest U.S. sanctions, the last set of restrictions under outgoing President Joe Biden. It's the first time that the U.S. is known to have levied sanctions on ships still under construction. The announcement caused oil prices to pop and the cost of tanker shipping to surge as well. The sanctions hit 183 vessels in total, targeting the so-called shadow fleet used by Russia to try and avoid oil export sanctions. I'm pleased to say that Rahul Kapoor, head of shipping analytics and research at S&P Global Commodity Insights, is joining us to discuss the story in more detail. Rahul, great to have you on the show. I just would like to first and foremost actually understand the implications here of this latest move from Joe Biden. What sort of ramifications are we already witnessing, and what is the outlook going forward now that we are about to have a new president coming in the White House?
Certainly, thanks for having me. So I think this is the most significant OFAC sanctions package which we've seen on what, like you mentioned, shadow fleet, dark fleet, the whole ecosystems, right? Since the start of the conflict, I think we have to understand that access to shipping tonnage has single-handedly facilitated Russian oil flows, right? When we are tracking it, we are seeing close to on 500 vessels which are nearing, or rather under the sanctions list and dominated by oil tankers. So it's a big package, it's significant, and this will have a material impact in terms of Russian oil flows and including the Iranian oil flows, right? So this is something which I would say the market wasn't prepared for, and that's the reason why we've seen traders scramble to get the tonnage and what we call the compliant ships to keep those cargoes going.
Interesting. I want to discuss all of that in more detail, but before we get there, I just want to show this map that you actually shared with us ahead of the conversation, which basically just shows where vessels are actually located at the moment. And looking at the map, it just seems that we have such a strong concentration of these sanctioned vessels going, say, from Denmark all the way to Asia. Explain to us, what does this traffic is telling us at this stage?
Yeah, so certainly if you look at Russian Arctic as well as the Far East, right? After the cap on the oil Russian flows, we've seen most of these cargoes going to India and China, right? 80% of the cargoes are destined for Far East, right? And they are all coming via what we call the Red Sea and the Suez Canal. And the challenge here is it's not only these OFAC sanctioned vessels, but we monitor close to around 2,000 at-risk vessels, right? So these vessels, and it's very difficult to monitor what we call the price cap, right? So these vessels could be involved in carrying sanctioned crude oil, refined products, and it's very difficult to monitor their loading and discharging, right? Sanctioned geography. So it's the opaque nature of the shipping industry, right? Which has helped Russia put these barrels in the market. But now with India and China having to look elsewhere, this is why we're seeing that impact on the oil prices at the moment.
Interesting. I would also like to go back to one of the points you made earlier in relation to oil tanker rates. Looking at those figures, we're basically 3 times higher in the space of just 2 weeks alone. What is the outlook here, and at what point is this likely to start biting businesses as well?
Yeah, I think there's a saying that shipping industry thrives in chaos, right? And the recent sanctions have led to a spike in rates. I think if you just go back, particularly for rates from Middle East to China, we were around $16,000, $17,000 just 2 weeks back, right? We're already above $50,000 per day. So there is a change in VLCC trade flow pattern. And we're talking about the very large crude carriers, the big ships, as the Chinese buyers, and we're talking about the teapot refineries, the refineries in Shandong, they start looking elsewhere. So they're looking for barrels from US Gulf, Middle East, West Africa. And what that does is the compliant tonnage, which is sitting outside of the sanctions, becomes lesser, right? So that is the reason traders scrambling to get those vessels. We've seen a huge upsurge in tanker rates. So short term, we do expect these freight rates to be supported, but I think we have to look at shipping slightly different, right? The effectiveness of these measures will depend on how quickly these sanctioned vessels, they can quickly reflag, change ownership, come back into the compliant fleet. Not so easy, but over a period of time, we'll settle in because there's still, I would say, the supply of shipping, which continues to grow.
Before we let you go, I would like to also understand what are your thoughts in relation to the outlook for traffic around the Red Sea, because obviously that has been such an important story for shipping. Now that we actually have a ceasefire in the Middle East, how is that likely to impact trade around the Red Sea region?
I think it's too early to tell. I think we've heard about the ceasefire. We've seen some of the moves. I saw the earlier story as well. But if you look at the war risk premiums, those haven't changed, right? They remain unchanged. So as of now, Red Sea is still a pretty difficult situation. And we do not expect the ship owners to hurry back in. I think we're talking about ships, commercial ships being targeted, right? So it will take some time. And when it starts to normalize, I would guess it will be the second half of this year. And that will have a huge impact on freight rates, particularly for the container markets, a severe dent there. And we do expect freight rates to come off across the shipping fleet if the Red Sea opens. But that's not a base case as of today. It's still too early to tell.
Another one for us to monitor over the coming weeks. Thank you for your time today. Rahul Kapoor, Head of Shipping Analytics and Research at S&P Global Commodity Insights. Coming up on the show, Donald Trump prepares to be sworn in as the 47th President of the United States of America. We'll look ahead to his return to the Oval Office after this break.
CNBC. Live ambitiously.
Thank you for that smile on your face. Sunny. Thank you for that beam that flows with grace. Now the dark days are done and the bright days are here. My sunny one shines so sincere. Sunny one so true. I love you.
Ambition doesn't always look like you think it might look. I can remember reading The Economist on my lacrosse bus trips in college. I've just always been super fascinated by what's happening in financial markets and what is that telling us about where the world is going. I want to democratize access to that high-level information and help explain to every single person out there watching why what's happening in these complex markets matters for their lives today and in the future. That's what drives me. I love being part of this.
Kelly Evans.
Assumption and U.S. growth, assumption and U.S. growth. But this dynamism is also explaining the end of the disinflation trend in the U.S. This is a movement that will be reinforced by the rise of tariffs. So we think that inflation risks are increasing, which will limit the Fed monetary policy easing. So we just reduce a bit the overweight in U.S. equities, and we're trying to be more diversified through, for example, Canadian equities. This is more value-based, and we're tactically looking at 3D. So to sum up, I call it the 3D, not for three-dimension, but diversification, and diversification for this year. 2025 will not be what was last year's profile, so 100% on the U.S. market.
Interesting. Given all of the calls there for diversification, I would like to get your thoughts on cryptocurrencies, because obviously we're seeing further momentum for crypto as prepared to see Donald Trump in the White House later today. What is the outlook here, and are we actually likely to see further momentum in the coming months, or perhaps the expectations around regulation are a little bit too overplayed?
No, I think it's a possible golden age for Bitcoin and cryptocurrencies due to regulation support that you just mentioned, an initiative like a national Bitcoin stockpile. So that could be something very supportive. We're also looking at a new ETF, not only on Bitcoin, of course, but other cryptocurrencies that could support the cryptocurrency market. But, it's very volatile. If you look at 2024, at the beginning of the year, the Bitcoin lost 30% in value. Of course, we're at record level actually, but we have to look at volatility when you look at cryptocurrency, even if Mr. Trump is a crypto pro.
I would also, to conclude the conversation, I would like to focus on big tech for a moment, because obviously tech has driven so much momentum for U.S. equities. I'm just trying to understand, with more volatility likely to be in the markets, could we actually see tech as being one of the worst performing sectors going forward?
No, I don't think so, because there's still room to go, especially on the artificial intelligence. So we're still very constructive on that theme. The earnings season is just started, so we see what big players such as NVIDIA or even Apple will tell us about artificial intelligence, but still constructive on the tech sector, but more with the mixed bias, so more diversified, the famous 3D I was just talking about before.
And on energy, though, what is the outlook there? Because a lot of investors expecting lower energy prices as one of the main market narratives coming from Trump 2.0. What is that likely to mean for the sector?
We think that fossil fuel and traditional energy should rally on this deregulation optimism. It will be very positive for the U.S. companies, but also for the price, the energy price that should go lower, and that should drive also, again, the optimism from the domestic players in the U.S. and i.e. growth, U.S. growth. So that will push the U.S. growth over 2.5% in 2025.
I would also like to just briefly get your thoughts on what we have seen in the bond market. Do you think that this is likely to be one of the most important market stories in 2025, the pressure coming from bond vigilantes on equities?
No, we think that if we look at the yield, we're close to the highest here. We just reduced a bit our duration on the U.S. bonds. So we think that the worst could be behind us, but we'll still be close to the level of 450, for example, for the 10 years. And so we could start to be more constructive on the bond market.
Interesting times ahead also when you think about the bond market. Ultimately, though, what do you think the inauguration and ultimately Trump 2.0 will mean for global equities? If you forget about U.S. equities for a moment, what do you think will be the ramifications of 2.0, say, for European or Chinese equities?
I think that will prove that it was not an error, a casting error from Mr. Trump 8 years ago. I think he is more prepared, and he will be less aggressive than everybody believed, more in a business mood. So that could be constructive for the rest of the world, even for China, I think.
When you think about China, however, what is the most important driver here? Is it the fact that we might get Trump tariffs applied on China, or is actually the stimulus that we could see from Chinese officials being the most important driver and market story for Chinese equities? Which one will have the biggest weight?
So I think looking at China, we have to focus on two things. The first thing is the fiscal stimulus. We think that there is not enough fiscal stimulus actually. That will be maybe China 2.0 in 2025. And the other thing you have to look at, talking about China and the relation with the U.S., is to see if there will be a retaliation from the Chinese to a potential U.S. tariffs. So those are the things we're looking at the beginning of this year, and maybe it could be a surprise for the Chinese growth in 2025 with a growth over 5% that nobody's expecting.
John, thank you so much for your time today, for the wide conversation. John Plessard, Senior Investment Specialist at the Mirabund Group. I want to take you to European markets so we get a final check on what's happening on European equities today. As I highlighted earlier, all in all, we are seeing a little bit of a cautious approach from European investors as we prepare to see Donald Trump arriving at the White House for a second mandate. However, at this stage, we have the FTSE 100 show outperforming the rest of the European bourses. We're up 0.2%. The FTSE MIB, however, under pressure. We are down 0.4%. I also want to take you to European bonds because also an interesting story there. We did see a spike in yields in recent times. However, it's also important to keep an eye on commentary from ECB officials. The ECB's member, Mr. Nigel, so the German central bank governor, saying the ECB shouldn't rush into rate cuts. So let's see what will happen there. As we continue to also monitor what the Fed policy could mean for this side of the Atlantic. On a programming note, of course, do not miss our special coverage of today's inauguration as Donald Trump returns to the White House. It all kicks off at 2 p.m. London time right here on CNBC. And of course, this week, also all eyes on the World Economic Forum coverage. We'll start our coverage tomorrow, so do not miss that special coverage. That is it for today's show. I'm Sylvia Morrow. Stay with CNBC.
Today's Forex Update is sponsored by Interactive Brokers. 150 markets, 33 countries, 27 currencies. Today's Forex Update was sponsored by Interactive Brokers. Trade worldwide from a single unified platform.
What made you want to do robotic surgery?
When I was training to be a urologist, robot surgery was one of the most exciting and developing space. I can show you around. This is the console. Basically, it's like the flight deck where I use my hands to be able to control, to maneuver the instruments in various directions and even move like a wrist. The pedals below looks a bit like an organ, so you must be able to use both your left and right feet all at the same time to control various instruments, the various energies you use to cut or to stop bleeding, etc. And also to control the movement of the camera. You're able to have stereoscopic vision, so you have depth perception.
But what if the robot breaks down? Ulam credits much of the heavy lifting to his team of nurses. Both surgeons and nurses in Singapore are trained in countries like Japan and the US to operate and troubleshoot the Da Vinci robots.
The day's top stories driving Wall Street. Tyler Matheson, Kelly Evans, Power Lunch, CNBC.
We speak to the world's most influential people.
I love what I do and it means so much to me.
From celebrities.
When we took a break, I thought that was the end of it.
To the C-suite.
I started on the factory floor and here I am 35 years later.
The economist and author Dambisa Moyo.
A lot of boards, many of the ones I serve on, went back to the drawing board to say, well, we need to do better here.
He turned a dream into a global brand.
Join the conversation on CNBC.